Those who don't read the news are uninformed, and those that do read the news are misinformed. There is a lot of lies that go around in the media for cryptocurrencies, for the stock markets, for real estate, for recessions. Today's video, I want to unpack these with you because these massive, and I mean massive lies and misinformation are keeping everyone poor. Now we're going to cover Bitcoin, we're covering Ethereum as it continues to rise, we have cryptocurrencies to look at, the stock markets continue to grind away, understanding how and why this is happening with our data, and of course, the big one, the real estate cycle. We are seeing recessions across the board, yet markets keep going up. How the hell does this happen? Let's explain it here on the channel. It's your home of macro cycle analysis, covering Bitcoin, cryptocurrencies, the stock markets, and of course, real estate. A holistic view of the investment landscape so you can get an informed understanding of how these markets are working. All right, guys, I hope you've hit that like and subscribe button. Thank you once again to all of your comments coming through. I've got a few of these to cover in today's video as I see them come up very, very often. Let's kick it off with the misunderstanding of recession. UK tips into recession in a blow to their prime minister. GDP fell by 0.3% in 3 months to December after collapse in retail, etc., etc. So the UK economy fell into recession. What is recession? Recession, as we've heard of it before, has been a contraction in 2 quarters. Some will say a negative GDP for 2 quarters. Others, in this case here, has said that if you get a contraction in the GDP, so gross domestic product, for 2 quarters, that's a recession. But it's pretty lame to think that your economy can't at least contract for a period of time, which would essentially just be the same as a market going up and then taking a breather. So I think in this case, what the US has done to redefine a recession makes sense because just a contraction is ridiculous. UK GDP declined for 2 consecutive quarters in the second half of 2023, therefore technically a recession. But what has happened in the market? It reminds me of what happened in Germany last year. Germany is also likely in a recession at the moment. We saw it last year as well. Here is the article again from The Guardian. Germany on track for 2-year recession. Okay, so what happened in these markets? You tell me. All-time high prices. Now, if I had an editor editing these videos, I would tell them to go back and check those videos so you can see that video pop up of me explaining even if these markets go into a recession, it's likely they're going to go into new all-time highs because of where we are in the real estate cycle. So this is all part of the game also for BTC and cryptocurrencies, because if we're seeing an overall uptrend and we're in the late stages of this 18-year cycle, well, then we're going to see a lot more money getting thrown into the markets and more risk on. So I've covered this many, many times before, somewhere around here, 2023, 2024, before we head up into this winner's curse. We might even be at the start of the winner's curse phase, and that is defined by this last stage of the market, which we're expecting sometime to peak around 2026. There's no dead point for the peak like you would see on a stock market. Remember, this is real estate and the economic cycle, and no one rings a bell at the top and says, the top's in, guys, get out because the markets are collapsing. It happens over a longer period of time. In this case, 4 years, you'll see it slowly at first and then very quickly. The same sort of thing at the bottom. After you get this collapse down, then it sort of grinds around and starts to work its way out. That's for the real estate and the economic cycle, as opposed to the stock markets where you can clearly see tops and bottoms get formed in the market because you're trading on a chart here. So to wrap up, on the recession, the stuff that keeps everyone poor. They're all waiting for these sorts of recession calls. Germany was in a recession. It's at new all-time highs. The UK market, it is 4% away from a new all-time high. Unless you just put in a new all-time high in February of last year. So 12 months ago, it hit a new all-time high and now it's grinding around all-time high prices. But what you're seeing from the majority of the market is they're waiting on the sidelines to enter on a collapse. And we haven't seen a collapse since the COVID bottom, and all we've seen from that point is higher lows, and higher lows continue to form. So I think this is part of how this last stage of the bubble plays out. We get this huge pump to the upside because, well, everyone has been waiting on the sidelines, at least for part of their portfolio, because they're expecting, hoping for a crash, a correction, and it just doesn't come. And we're seeing that grind up also on the S&P 500, which I want to cover with you guys in just a moment. Even the UK home price index is up. Let's have a look at it here. JBHP1, it had been rising since September. I know a lot of folks in the UK are saying, how is this possible? In my area, it is down. I'm following the charts here, which give you a broad view of the overall increases. It's been going up for several months now, getting back very close to the previous old all-time highs on this index. So we're looking broadly here and looking at the markets probably more like your Londons, Manchester, the biggest cities in the UK. Home prices continue to climb in the US as well. It's not great for us trying to get into the markets, trying to buy a property, because of course it gets harder and harder. The prices are going up faster than what we can actually save for. But unfortunately, this is just that stage of the cycle. The markets continue to increase, but what comes after this would be that collapse. So not reading the news keeps you uninformed, and reading the news keeps you misinformed. I think the same thing happens when we look at the US dollar and how much it has inflated as opposed to devalued. It has actually gone up 6% against the rest of the world currencies looking at the DXY. This period compared to 2020, it's up 6%. Yes, devalued, it has gone down in inflation, but you're just losing out against the holding power of the US dollar. So you have two options. Your options are to hold US dollars and continue to lose purchasing power, or you buy assets that you think are going to increase so that you can maintain your purchasing power and eventually sell those assets for a profit. So if you're sort of sitting on the sideline waiting for this market to collapse because it's only going up because of inflation, well, essentially you're just losing out to inflation. And you've got two options: wait on the sidelines and watch everything go, or you get into assets. And as we look at assets here, of course, we look at things like BTC. And if you want to get a little bit more degenerate, then we get into the altcoins. So these ideas about US dollars devaluing, recessions coming through that are going to collapse the markets, and what we've seen recently, as I put in the videos of late, is a reverse crash, God help us, the markets continue to go up. So I've got a couple of pieces here. This one is a month old. The thing I like about this is that we can now see what has happened since that reading, or since that signal occurred. So looking at the breadth of the market here, we're looking at all country breadth percentage above their 200-day averages. So you've got your 200-day average line. How many of these countries are above that line? So I showed you that, at least for now, I've showed you the UK was at near all-time highs. Germany is hitting new all-time highs. India at new all-time highs. It's a big emerging market out there. Japan nearly at all-time highs. Maybe it's hit it today. Australia all-time highs. You know, it's the 13th largest in the world. Of course, the US, all their markets are at all-time highs. So we're getting a very, very big breadth here of a lot of countries above their 200-day moving average. Now, in terms of the short term, when this has signaled, which it signaled on the 16th of January, a week later was a negative. 2 weeks later, 1% increase. 1 month later, median return was basically flat. The average return was about 0.7. So it didn't really have a good record over the course of 1 week to 1 month. There wasn't really enough here to say that this is a reliable signal to say that the markets were going to continue up. But 3, 6, and 12 months later, it's almost a guarantee. I hate to use that word, but you can see from the statistics here that 90% of the time, 89 to 94% of the time over these 3 periods, the market has been higher. Now I want to bring us back to this 1 month period, because this is now a month and a few days old. You can see that the average return was 0.7. If we take a look at the S&P 500, this was where the signal occurred on the 16th of January. This is where we currently are today at a roughly 4.8. But if we look at a month in, which was 30 days, at 5.2%, you're roughly an 8x return, 7x return on the gains that were anticipated back in this report, a 0.7. But what actually happened was a 5.2% return. So within a month of that signal, the market got 5%. Now, this is the traditional markets. They are showing a lot of strength. On top of that strength, we're looking at the stair-stepping effect here as it continues to break to the upside and pause, break and pause. And we're seeing that rotation through different sectors within the S&P 500, which leads me to this article just a day ago, looking at the material sectors and essentially some of the defense sectors. So what's happening is it seems like corporate insiders, or essentially the smart money here, are rotating between sectors. And this is potentially or could it potentially explain the grind? You get a pump up and then a grind. So if they're rotating through sectors as their portfolios increase, going from growth sectors, then rotating into defensive sectors to hold on to those profits, and then back again into growth once they see the growth sectors bottom out, and then back into defensive, you get the idea here. You go through enough rotations over a period of time, and then a push up to the upside. Rotation again, push to the upside. Rotation again, maybe we see a push to the upside. And the reason I talk about another push to the upside, we're just looking at the corrections here, and the idea that we've presented over the last several weeks when it comes to the corrections, now that we've pushed pretty heavily into a new all-time high, is that we're likely to see single-digit corrections. So we're at about 2.5% correction so far. If we got back to the old all-time high, it's roughly about 5% correction, and then 50% from this top to the current low, which was the October low, for that range is about a 9%. So there's still single digits corrections all the way down to the 50% level. And if we do see a greater correction, I would say that we'll go on this grind again. It'll just take a little bit more time, and then we go on this stair-stepping effect all the way to the upside. Like you could see back in 2020 and 2021, just as one example, we've gone through many, many years before where it's the same sort of thing. Significant correction, grinds up, another correction, grinds up, another little correction, and then just this long, long grind, which sucks everyone into the market. So is Bitcoin on this similar path? It seems like we've gone through that since September. Now, there is one analyst that I want to point a very, very heavy finger at here, who is saying this time is different. To call this time is different is absolutely uncalled for. And you should go to their website, go to their YouTube, and tell them this precisely. Now, I found the culprit here. It is none other than Michael Pizzino, calling this bull market will be different. I've left a link to his channel in the video description. Go over there and tell him what you think of someone saying that this time is going to be different. And don't go easy on him just because he is my brother. Now, of course, he didn't say those words. It's an article. You see how news works. Let's move on. Bitcoin looking like we've got a potential flag forming at these levels here. So I've just got the flags up for you guys, the pennants. In an uptrend, bullish, you've got a bull flag, which basically falls. You've got lower highs, lower lows, and then eventually breaks out to the upside. It looks like we could potentially be more like a pennant flag here. But essentially, we've got no indication of whether Bitcoin wants to go up or down, because we have been grinding now since the 14th, since Valentine's Day, and we're now into our 8th day of this grind around $50,000 to $53,000. What I am looking at are the corrections to the downside. Anything abnormal, I would probably reject at this point based on the strength that the market is showing. We're at a 4.5% correction, probably one of the smallest corrections that Bitcoin has ever done. To the downside, to the 50% level of just the range now to the upside from the breakout in February, about 10%. To the tops at $45,000, about 15%. To this next level here at about 43.5, which cuts through the middle of where you could see the support and resistance forming of the previous move, about 18%. And then all the way back to the 50% level, should that top at 53,000 hold, gives us about a 26% correction. So that would still put us in a bullish stance, a healthy correction, if you will. And we can see from the previous corrections, each of these occasions had been quite fearful. Our crypto SEC drama, there was a Binance event through this period. We obviously had the banking crisis. The market could barely do 22%. So I think most people are pretty aware of that 20% correction. So I've still got something here that could go a little further, around those sort of worst case scenarios back near the previous zone that the market was grinding out of. But as I've put in previous videos, I think 32K is basically off the card. So if you're waiting on anything around the 40% type correction, I don't think this is going to be the place that plays out. That's a short term for Bitcoin. Over to the longer term here, we're looking at the monthly chart. Up for 5 months. I've got it on candles here to see that nice fat bar playing out. 5 months up. We've got about 8 days left in this month, and then of course the next month of March to get us through into the end of the quarter. Now I've got our forward returns table here. It's a new feature of the TIA indicator suite, which will be launched very soon. So jump on to our free crypto and economic report if you want to be notified when that is getting released. This thing helps us identify the trends in the market. I love to use the 6 months and the 12-month forward returns to understand any sort of movement over this coming 6 to 12 months and what the likelihood is of Bitcoin putting in a positive 6 months, negative 6 months, or for the 12 months as well. But we're just looking at the monthly here. February, it's been a pretty well green month for its history. If we take out the bearish years, you've got 2018, 2022, it doesn't really make much difference because they were both green in those bearish years as well. There's also 2014, which was a pretty decent bearish year. We have 11 data points with those 3 removed. 9 of them were wins, 2 of them were losses. So about an 82% chance that February remains green. 2023 was pretty well flat, but nonetheless, it's still up there with a pretty high percentage hit rate of giving us a green month. March, however, is only 50-50 using these same metrics, which isn't such a great return there, which could also play into a possible negative or flat-ish quarter. Remember, we still have a month and 8 days to go. Anything can happen to BTC in these times, especially as we are grinding out here. So there was another piece I wanted to add to this when it came to ETFs, just looking at the misinformation, the misunderstandings. And when it comes to the ETFs, all I'm seeing in the comments from a lot of folks, and not just on my videos, but everywhere, is that people believe the ETF is here to stay and always pump the price. Now, we're seeing a lot of comments suggesting that this time is different, unprecedented catalysts, and they think this time is different now because of the spot ETFs. As I've pointed out before, it seems crazy to think that many believe these markets cannot correct. But if you get a small change in what's going on right now, we know from the spot ETFs, ETF companies are basically buying up 10x worth of Bitcoin every single day. If that changes to half that amount, that is going to send shockwaves. I guarantee you that will make news headlines, which will probably be perceived as bearish, even though they're still buying more than's out there on the market, which could then flip the price down from where we currently are. It's just a thought. And I want to keep those always floating around because the amount of certainty around how this time is different actually scares me a little bit. So although the price of Bitcoin can keep going up from this point, as I pointed out, looking at the possibility of a flag here and we could grind higher, I'm always keeping an open mind to the possibility of a correction, which is why the swing chart helps a lot. It just helps follow the trend without all the emotion of or listening to the misinformed news and the headlines of this time is different. The ETFs are here to stay and they're pushing up prices and it's just going to go on and on and on. It might not be that way forever. Now, Ethereum might not be down forever either, down against its BTC value. It's still attempting to close higher from this double bottom back in June. So it's a more macro double bottom looking at June 2022 to the low here in January of 2024. So basically like an 18-month double bottom. On the daily chart, you can see we have been rising. Just yesterday we had a red day, but still a higher high and a higher low. In terms of the number of days now with higher highs and higher lows, we go all the way up to yesterday, which was 9 straight days. So eventually we do need to get a pullback in this sort of trend. It is above the 50% level. And as you can see from the dotted lines, this is essentially a rough target of where I want the ETH BTC price to hit by this time. So there is my price target. There is my time target. I want to see it close above around 6 million Satoshis by here's my date here, by about mid-March I'd probably say around the latest, based on what we've seen in the past, looking at the weekly moves to the upside. So all I'm doing here is going back and measuring the weekly moves that ETH has run from some of these low points. There's 5 weeks. Onto the next one, take it from this low to the top. You've got 3 weeks. Taking it from where that low triggered, that little double bottom here, to the top, you've got 6 weeks. From the next move at this low on the breakout, you've got about 7 weeks. And then each of these moves in between are roughly about 3 to 4 weeks. So you could look at where we sit now, measuring from this current bottom, that's about 2 weeks up. So if we went 2 weeks, that's it there, all the way over to about 5 weeks, that's about March 18th, the week beginning. Take it out to 7 weeks, that'll take you to roughly around early April, which leads us into the halving, which is happening around mid-April. I think if that occurs and mounts another attack at the 6.8 million Satoshi level, that would be confirmation that the ETH BTC bottom is in. A break above that 50% level, 6.8, providing this low remains intact, that would be confirmation that the ETH BTC low is in, and that strength will build in Ethereum. You'll get better gains from Ethereum across the rest of this bull market with however much is left. Speaking of better gains than BTC, we've got Sol, TIA, and Pendle to have a look at. Sol pumped, reaching its peak on Christmas Day of last year, and we've been following this, just looking at the failure or the breakdown against its BTC value. It's hit that level just yesterday. It's back to the low here, roughly 200,000 Satoshis. I suspect, as I've mentioned, if it breaks this level, that's the failure there, and we're going back to test somewhere around the 180,000 Satoshi level. So what you'd be looking for is a bottoming pattern forming and then breaking back to the upside, hopefully breaking back above the previous swing bottoms here, that the bottom is in, and that you're starting to see more strength come back into Solana against BTC, which would then provide you with better gains, better returns against its USD value. So that's where you start to see those big skyrocketing moves to the upside. Every time the price goes ballistic, that's the sort of thing you want to see against its BTC value. But as you see this, the USD value is basically holding flat or slowly trending up or down, basically holding flat because, well, in this case, Bitcoin has been rocketing up and then it's basically been pausing as well, which leads me to TIA. This is your Celestia. It has been on a downtrend. It got back close to the top, which basically puts in your lower swing top, which is a weak pattern, many days in a row. So several days in a row here to the downside, tiny little swing back up to test the underside. So support becoming resistance, rejected again to the downside. So how do you use this? Well, you look for the reverse. You look for a bottoming pattern, look for an area of support coming in. And I'm telling you this in advance so that you can keep track of it, as opposed to, I guess, what many want to hear is they just want to hear when it's going up. I would rather know and prepare in advance for something that I could get into, as opposed to just hearing these things when they're only going up towards the end of the peak. So keeping an eye on this, setting my alerts roughly around the 50% level, a nice round number here, about 280,000 Satoshis, and see what we get from that point. Same sort of deal with Pendle. It's been coming down. And if it's not able to hold the level here, it's roughly 4,700 Satoshis, well then guess what? You're probably going to expect a breakdown. That's how important these 50% levels are. So keep an eye on that. There's probably some fresh ground to run down to 4,200, then to the next low at 3,800. If it goes any lower, you're probably looking somewhere around 3,300 Satoshis. So we're going to keep watching that as well. So keep an eye on the channel or join us at TIA Premium to learn how to trade and invest cryptos, the stock markets, and of course, real estate as well. Link is in the top of the video description. Like and subscribe. I'll see you guys back here at the next video. And don't forget to go give Michael a hard time on his channel. He's got some fantastic videos that he has just posted as well. See you at the next one. Cheers.